All right, we are live. We are live on Tuesday. And today I want to do my live stream mostly on crypto miners, talk about Ethereum, and let's talk a little bit also about what a wacky stock market we have going. Going on right now. But before I do any of that, I want to do all of the usual things that I need to do before I can talk, which is do the disclaimer, which is that this live stream and the content from ATG Digital Media is not investment or financial advice. It is presented as opinion, information, engagement, and entertainment. All ATG digital content may contain errors, oversights, and mistakes. We're not perfect. Understand that investment operations of any kind. What is an investment operation? It means if you buy, sell, speculate, trade, do anything, crypto stocks, that's an investment operation. Has significant risk and can lead to loss of your principal. The owners, employees, contractors, own, trade, transact in the securities that I mentioned in this video and all the content from ATG Digital Media. If you want to look at our varied free content, the Substack would be the one that Dean would tell you. It's like, hey, come on, go check it out. Ballman Speculating podcast on Spotify, and of course, YouTube. Social media, X, very active with a lot of text-based stuff. Instagram, yeah, kind of maybe. Facebook, Dean is on all the time in my name, writing stuff. And if you want paid subscriptions to ATG Digital Media, where we focus on opportunity, growth, innovation, and crypto, atgdigital.media is the website. Subscriptions begin at $9.99. Okay, so let's talk. Let's talk today about a lot that's going on in the market underneath the surface. All right. First, let's do Bitcoin because, hey, if you've been with me since Banyan Hill days and you followed what we were putting into the portfolios, then in all likelihood, you have some exposure to Bitcoin, either through GBTC, either through actual Bitcoin, or maybe if you might also own crypto miners, and then you also, in all likelihood, own Ethereum. And then if you join me at ATG Digital Media, then we also have Dogecoin. And then at ATG Digital, we also put XRP into our silver tier, which is the kind of sort of roughly equivalent to Profits Unlimited at Banyan Hill. So let's start with what is going on with Bitcoin. So this morning I got a text. I was like, hey, Bitcoin is at 73,000. And then by the time I got to my phone to look, it was at 71. And right now I look, it's at 68. So I very quickly went to my phone and be like, okay, 73 times 0.9, in other words, 90% of 73, I got to 68,000. In other words, a 10% correction or a 10% drop would be 68,000. Then I did 73 times 0.20. I got to 58,500. And then I was like, well, if you have been with me and own Bitcoin since January of 2020, in March of 2020, we saw Bitcoin go from 10,500 to, I think it was like 3,500 in the space of, it was, I think like I want to say a day. It might have been a couple of days in that COVID crash. So, 73 to 68, 73 to 58. Yeah, if you lived through, the last bull market high was 69. And we went all the way back to 15,800. Do I want to go through that again? No. Is it likely we're going to go through that again? In my judgment, in my opinion, no. All right. And I've laid out on this channel a lot of reasons why, in my opinion, in my judgment, what we're seeing right now really is pretty normal buying and selling, that you see associated with, yeah, just general prices, which is that, why do these, like, you know, moments of, like, yeah, where prices just suddenly drop by 10, 15, why do they happen after a high? For example, the first time we hit 70,000, there was a big drop back down to 68, which was bought up immediately, 73. Well, what's going on? And we can see some of this from what is going on in the blockchain. Remember, Bitcoin is obviously a token and we're focused on price, but there is an underlying technology here that is transparent. It is a public ledger. In other words, like an accounting book. And you can go online and you can actually go and check. And so one of the things that happened, for example, when Bitcoin price got to 70,000. And when I say Bitcoin price got to 70,000, it's not like that happened by magic. I mean, this is happening as a result of demand, primarily that is coming from now 9 Bitcoin ETFs that exist. The BlackRock ETF is already nearly half the size of the Grayscale Bitcoin Trust. That's barely like 2 months later, and Fidelity's Bitcoin ETF is about 70% of BlackRock. So, I mean, we've got like 10, 11, $12 billion that has come into Bitcoin. So when we say prices are going up, it makes it seem like there's some sort of like magic that's happening. No, folks, it is these ETFs and their buyers, their traders be like, hey, there's 100 million coming in. I got to go buy Bitcoin. There's 100 million more coming in. Oh, I got to go Bitcoin. And what's happening on the other side? Well, one of the X accounts that I follow indicates that for the most part, a lot of the selling since the Bitcoin ETF has been approved has come from small and medium-sized Bitcoin holders. And people are theorizing, like, why would like small owners, in other words, folks like us, why would they be selling? And maybe some of you have the answers. Maybe some of you have been selling. I don't really know. But maybe some people, hey, the last high, was what? All the way back now, almost 4 years ago at 69,000. And I have theorized that, well, the nature of very volatile instruments is that they really, there's a emotional, like, tax and a burden of, like, seeing something very high, that psychological euphoria. Oh my God, I've made so much money. And then watching those gains drip down, which means what? Which, in other words, people are selling, they're pushing prices down as they sell, and then going through that. And so if you go through this, then there is probably, I don't know, 20, 30% of people who are like, you know what, I'm done. I don't really care, Paul. If you tell me it's going to 1 million, and Michael Saylor can tell me it's, we're going to be buying at the top forever, I'm done. I'm out. So it does turn out that, for example, when Bitcoin hit 70,000, a genuine OG, that had been in Bitcoin since 2012, I believe, 2012. Yeah, it took 1,000 coins and just pushed it into the market. Yeah, it was like a market order to sell. And, I've told you this, which is that we're always focused on the psychological element of price, right? High prices make us happy, low prices make us unhappy and make us sad. But there is market mechanics that is going on underneath it. It's not like, there's a happiness and sad button, in markets. Instead, there's buyers and sellers, demand and supply constantly interacting. And obviously underpinning that are people's hopes, aspirations, people's analysis, research, thought. But in the end, our emotions ride up and down with these prices. So, I was theorizing, well, why would someone who had 1,000 Bitcoin been in since 2012, right? 2012. Crazy. Right? How much volatility has this person endured? So, I believe at the 70,000 mark, something like that, if they estimated that trade was something like 42 million, if I remember correctly. I can't remember. That's what it was. So they're cashing out after like 12 years of hodling. And my best guess is that somewhere in the next day or two, we're going to find out that, there are other people that got in very early. I mean, 2012 is like, I think you'd have costs in probably, on the high side in the hundreds, maybe on the low side, much lower than that. So, yeah, I mean, these folks want to cash out because they're like, hey, I missed the top in at 69,000 3-4 years ago. I don't want to like miss out. And truthfully, from my research of price and investor behavior, this is pretty much par for the course, which is that after a top that was a long time ago and you get here, well, there's like a stored up, pent up sort of supply of people that are like, I'm out, I'm done. I mean, this is good enough. I should have gotten out back then. I've been waiting for 4 years and I'm out. And these things like act as sort of like little like release valves. Yeah. I mean, it is probably, feels pretty scary. Like, oh my God, all my gains going to go, or they are disappear, because many of you have held through. I mean, if you bought at 10, I know there's some folks that bought lower, but at 10, and then there was plenty of period in 2020 to buy lower. And then suddenly, by 2021, it was 69,000, just like what? At the low in November of 2022 is 15.5. And now suddenly, it was at 73 today. Now, I don't know, let me just do a quick check just to see like, well, where is Bitcoin right now? Yeah, it's back to 70. So like, hey, yeah, but has anything changed? In my judgment, in my opinion, nothing's changed. In fact, we're not even at, the big event that is coming, somewhere between April 17th and April 20th. I've seen dates of the 17th, 18th, 19th, and 20th, and that is the halving, right? The halving is where the daily reward for mining Bitcoin goes from 900 a day to 450 a day. And at present, the Bitcoin ETFs seem to be sucking in somewhere in the range of, yeah, I mean, on the low days, it's like 3,000. So remember, we're only producing 900 a day. So the ETFs, and this is including the selling off by people, of GBTC net, it's like, somewhere, 3,000, 1,000, 3,000 is the low range. The mid range is sort of like 3,000 to 6,000. And the high range for now is between 6,000 and 9,000, 10,000. But every day, the supply of Bitcoin that is being produced by miners is more than offset by the buying, and that is demand. That is demand that keeps coming and keeps overwhelming the supply. So we can go through these periods like today or like, a couple of days ago, where there will be these sudden sharp drops in Bitcoin price. Why? Well, in all likelihood, it's someone that has been around for a while that's like, 73 is a great price for me and I'm out. Why do they want to be out? Hey, I'm not them. We're not them. Yeah, I mean, if they want to take their rewards in fiat, but at the same time, this is also offset by folks like Michael Saylor, MicroStrategy, that yesterday announced that they have taken $800 million, which they borrowed, right? They borrowed in using a convertible debt bond and bought, yeah, but Bitcoin, I think towards the end of February and early March, $800 million worth. So yeah, there's big whales selling. Equally, there's big whales buying. Who are the big whales buying? Well, for now, it's the Bitcoin ETFs, the BlackRock ETF, the Fidelity ETF, Cathie Wood's ARK Innovation ETF. I mean, it's just sucking that in. And then we got Michael Saylor. For now, there's two big whales, right? But hey, I mean, I'm going to say when Bitcoin resumes rising in price, what is that going to stimulate? It's going to stimulate what? Additional demand. Because how do financial markets actually work? Financial markets don't work like merchandise markets. In other words, if the price of phones go down, the demand for these phones yeah, they rise. People are like, oh, I couldn't afford it, now I can buy. But the stock market and financial markets are generally quite different, which is that the thing that we want is that we want to experience gains. So there's generally much more demand as prices rise into a rising price trend than there is here. Periodically, yeah, after a long rise, people will be like, well, that's a great stock. That's a great crypto. I think I'm getting a discount. But generally speaking, people will wait and they want to experience gains. So in my judgment, nothing's changed. We've got the big event going on, which is that the halving is coming on, let's say April 19th. Um, and that is going to chop the supply of Bitcoin down by half. And yeah, I mean, I don't really understand why folks who have been through the 2012 halving, 16, 20, and now the 2024 halving, why anybody would want to sell all of their Bitcoin? But who knows? Like, I mean, maybe the person who sold 1,000 Bitcoin, maybe they've got 9,000 more left, and they're like, hey, I want to buy a nice fancy yacht. And obviously, most yacht makers are not taking Bitcoin, which is fine. So you convert into Fiat USD, and then you pay for your yacht. Maybe they got 9,000 left. So who knows? But whatever it is, the one big difference, and I laid this out in my YouTube video that I did on my model for the 2024 halving, is that in this halving cycle, the big difference is the presence of these big whales, which is MicroStrategy, which began in 2020. I don't know how active they were, truthfully, in the 2020 halving cycle, but they are very active. I mean, MicroStrategy, which is a holding in our gold tier and is up 800% since I originally put it in there. So anyone that owns that, hey, awesome for you. Well done. They're closing in on owning 1% of all of the Bitcoin that can ever be owned. I think they're like 3,000 away. So after the 800 million that they, just announced yesterday, I think they're closing in on 1% of all the Bitcoin that can be owned, which would be what? So 21 million, 1% would be 210,000. So they're closing in on that. So the presence of big whales like MicroStrategy, these ETFs. But look, folks, price, in my opinion, in my judgment, is going to keep going higher. Why? Well, you've got very finite supply, very limited, and yeah, I mean, everyone keeps issuing more money, right? I mean, our debt is at 38, well, I think 35 trillion. There's clearly an extraordinary amount of liquidity in the financial markets. That's evidenced by, the S&P 500 at all-time highs. Despite the Federal Reserve lifting interest rates from 0 to nearly 5.5%, hasn't sucked up the liquidity. Asset prices of so many different things are all-time highs. That points to the fact that there's plenty of liquidity in the system. So you've got very limited quantity of one thing, Bitcoin, nearly unlimited quantity of the other thing, which is fiat US dollars and fiat euro and fiat yen and fiat Australian dollars and Swiss francs. Pretty much every country in the world, they're never going to shrink the amount of currency that they put out. Well, because most economies, after 80, 100 years of loose, currency regimes. In other words, the US dollar has had no backing since we went off the gold standard, and neither has any of the other world's currencies. So we've lived in a world of unbacked currencies for 80, 100 years. Yeah, I mean, we've got unlimited issuance going on. So very limited supply of one, unlimited supply of the other. Yeah, it's just not that difficult, in my opinion, in my judgment, to see what is going to unfold as people really come to terms with the hardest money that human beings have ever invented, which is Bitcoin. It was never possible to have a finite amount of a currency that could be transparently be verified and audited in real time, all the time, to everybody on earth, not, in some secret. You can go on the internet and go look at the blockchain. I will tell you exactly how much Bitcoin has been issued. Every transaction is there for you to see. Like, yeah, we've just never had anything like this in human history. And the demand for it is potentially unlimited. unlimited. Thus far, the only person that really kind of seems to have like figured this out is Michael Saylor at MicroStrategy, which is why, I mean, what is he doing? Like, I mean, he's actively sort of like shorting fiat US dollars and taking it and buying Bitcoin. And as Bitcoin price goes up, he uses that and the price of MicroStrategy, which keeps it bid up, to do the same thing again and again. It's an active process of saying like, hey, you got unlimited quantity of something, which is unbacked fiat currency, and got a limited quantity of this one thing, which we're going to keep buying. And what if a second company decided that they just want to do this, or a third company, or if other people start to be like, hey, well, I'm going to start to get in on this this ETF. Well, then whatever we're seeing, okay, 73,000 to whatever it was, 68 instant, whatever, 10% liquidation sales by somebody. Hey, that's all fine. For us at ATG Digital Media, or we're going to hold on. And I have laid out my model for why, in my opinion, in my judgment, the 2024 halving cycle is going to resemble, I mean, something between the 2012 and 2016 halving cycles, where you had, after the supply shock of the halving, which caused prices to go up, then you have a demand shock come in because people want to buy when they see the price of an asset rising. It stimulates demand. We're going to see some big number. I mean, already we're in unprecedented territory where the Bitcoin price is now at 100. I mean, at 73,000, it would have been at 105% of the previous all-time high. So we've never been in that territory before. So we're starting already at a very high point, which means that into the halving shock, yeah, I mean, I will still put myself out there and say, I think we have a better than 50-50 shot of one Bitcoin hitting $1 million come, whatever the all-time high hits, which based on my research and my study of the dates tends to come about a year to 18 months, something like that. Well, I think it's more closer to a year after the halving date is when the high tends to be. We've got a better than 50-50 shot of that. And, go and watch the video. I don't need to like lay out everything all over again, but either way, yeah, I mean, whatever is going on today, there's no panic in me. And there's clearly no panic in Michael Saylor, given that, they just spent $800 million to buy Bitcoin quite recently. Yeah, they're not planning to sell. Certainly in ATG Digital Media portfolios, whatever our exposure is to Bitcoin, we're not planning to sell. We're not planning to sell MicroStrategy. And personally, I've never sold. Yeah, after a certain point where I like figured out that Bitcoin was digital gold, I've really never wanted to part with any of my Bitcoin. And in fact, I recently was asked by Coinbase if I wanted to participate in a focus study on one of their products. And they asked me like, hey, well, we're going to give you a $75 reward. What would you like to take it in? And, Bitcoin, I think, was at 72,000. I said, $75? Sure, give it to me in Bitcoin. Because you know what? When it's at $1 million, even $75 worth of Bitcoin is going to be worth something. And let's say that I'm right and you think even out in the future and it's at whatever, 4 or 5 million or 10 million one day, that $75 is going to be worth even more. So I'm still bullish on Bitcoin. And like I said, I've laid out my prospects for there. Now, one thing I haven't talked a lot about is Ethereum. And yesterday I put out an X post and I said that people are completely underestimating what Bitcoin and crypto, and by crypto, I mean Ethereum and a number of other blockchain tokens that represent virtual currencies are going to do to the financial system. And most people are focused only on the speculative side of whether it be Bitcoin or Ethereum. But Bitcoin has a purpose and a utility. It is a store of value. All right. You can agree or disagree, but that's my opinion. It's a store of value. That's the primary thing that people own Bitcoin for, is its scarcity. That's what gives it its value. That's what's driving the demand, right? With Ethereum, it doesn't have that finite demand, right? In theory, yeah, Ethereum can be issued in unlimited quantity, no different in some ways than US dollars or euros or Japanese yen, Australian dollars or Swiss francs or anything else. But there is some big differences, right? And I laid this out in my X post, which is that no one knows and no one can tell you how many US dollars have ever been issued in US history. We have no idea. We have no idea. We don't know how much of US dollars is actual circulation because there's no actual way to track this paper. Even with electronifying dollars and movements, sure, those things are trackable, but a lot of paper money is not trackable. So no one really knows exactly how much US dollars in circulation, and no one knows actually who holds it. Like, yeah, obviously we know what the central bank of China has in US dollars and, et cetera. But, if you're outside the banking system, which, even in the United States, there's 30-40% of people that don't have a bank account. No one really, can tell, like, hey, where are all these holdings? So the cost of money movement, of course, is expensive. It's cumbersome. It's difficult. It takes a long time. And so if you look at the world like that, and you're like, well, Ethereum, yeah, we can track and know exactly how much Ethereum has been issued at any time. It is also a public blockchain. You can go to Etherscan and go and look, and it will tell you. At any given moment, you can see how much Ethereum is circulating. You can know by wallet exactly where all of this Ethereum sits. So on all these fronts, Ethereum is a far better currency for transacting, for the movement of money, for contracts, for buying and selling, for all the things where, in the old way of doing things, where there's a lack of trust in the system because you don't know. You don't know all of those things. So that lack of trust means that it's expensive, it's cumbersome, it's time consuming. The blockchain, solves for a lot of these things and is a far better solution for it. So Ethereum, in my judgment, sort of like if you were to visualize the world, Bitcoin is a little bit like, the old world of the gold standard. Bitcoin is like gold, and Ethereum is a little bit like silver. While people talk about the gold standard, the truth is that in old metallic standards, silver was actually much more the coinage and usage because it was cheaper, it was more malleable, it was easier to use, wasn't quite as valuable. So, in some ways, there's some sort of parallels going on between sort of those worlds and here. And in my opinion, my judgment, Ethereum is going to end up being one of the critical blockchains on which a lot of the new crypto-based sort of financial infrastructure is being built on. And over the next, I said decade in my X post, I expect banks, insurance companies, intermediaries, financial intermediaries that have constructed their businesses and benefit from all of the problems that I laid out. Those are all sources of revenue for them. Those are sources of fees for them. They charge you for them. Yeah, they're all going to be wiped out. As I put it, Bitcoin and crypto, they are going to suck the marrow out of these assets and leave like a dismembered Hulk. That's what's going to. It's not reflected in the stock prices of banks or insurance companies or intermediaries or exchanges, but the blockchain is a far better solution for all the reasons I laid out. So Ethereum is the leading blockchain in terms of financial infrastructure. There's already multiple protocols for buying and selling, for contracts, for processing transactions, for real world assets. So this is going to be probably for the foreseeable future, the number 2 crypto, because there is a reason and a purpose for it to exist. It doesn't just exist so that people can, wish and hope for their token to get, bid up to the moon. And as a result, people are forced to actually accumulate Ethereum and keep it. Because why? Well, to use the blockchain, you have to use Ethereum to pay the fee for using that blockchain. So every protocol there, for all of those things that we use in our daily life, all the transactions, yeah, imagine if that all started to go onto the Ethereum blockchain. Well, what's the upside for Ethereum? Well, I mean, it has to be multiples and multiples of where it is. I mean, our banks are worth several trillions of dollars. Our insurance companies are worth trillions of dollars. All the various organizations that hold on to the titles for cars and houses and all of these things are worth hundreds of billions of dollars. And Ethereum's market capitalization is what, 300-400 billion. So where could it go? Well, if you think like me, and if you're off the view that this is there, well, hey, the upside has got to be $30, $40, $50,000 per Ethereum. I know that sounds insane. That sounds ridiculous. But nonetheless, I mean, hey, even in 2020, somebody putting out the prospect of Bitcoin going to where it is today at 70,000, or where it's going to go before the halving, or where I'm saying it's going, which today sounds crazy, but not that crazy, which is $1 million. Yeah, people would have said that's insane. But that's where the world is going, in my judgment, in my opinion. It's sort of like already underway. It's not going to be underway. It's already underway. There is huge movement by many companies to take their real world assets and put it on the blockchain. That is well underway. There's tokenization going on in both the United States and in Europe and in Asia of bonds. In other words, they're putting those on the blockchain. So all of this is underway. It's just that, yeah, I mean, at this point, it doesn't seem quite big enough that people are like, yeah, this is real. But as I have told you before, which is that you can wait until it's all done, and there'll be plenty of upside, I'm sure. If you bought Ethereum at whatever, maybe at 12,000, 15,000, 20,000, and it goes to 40, yeah. But I mean, hey, we bought Ethereum also in 2020, and I think when I last checked, let me check and see. I keep track of the portfolio. So the Ethereum gains, I believe it's we carried all of the costs over from Banyan Hill. Yeah, Ethereum we put into the portfolio on December 3rd, 2020, and 541% is where we are at. So in my opinion, yeah, I mean, cryptocurrencies, have an extraordinary upside, far greater than the vast majority of stocks. Why? Because it's a new asset class. The vast majority of people don't own it. The vast majority of people don't really understand it. And there's an entire group of people that think that these are all pretend coins and they'll all go to zero. And hey, if that's your point of view, that's fine. Everyone is not you, and you are not everyone. This is my viewpoint, and everyone is entitled to invest accordingly. All right. Before I take questions, let's talk a little bit about crypto miners. I've gotten a number of questions on X about crypto miners because they had a huge run starting about October till about, I would say December, maybe early January, and then they've sold off. And people are like, hey, Paul, I got a post yesterday saying, Paul, people are selling the crypto miners to buy the ETF. They might be doing that, but I don't think those folks really necessarily understand the cycle of crypto mining relative to Bitcoin. And I explained it in my Bitcoin model video, which is that the crypto miners run off the Bitcoin halving cycle. And they tend to run ahead of the cycle, then sit, and then run ahead again. And the key for them is really the fact that, their costs are fixed, and they're fixed relative to the cost of mining for Bitcoin based on the current halving rate. Because remember, they're earning in Bitcoin, right? I mean, so if you're a crypto miner like Marathon Digital, which is in our gold tier, and then we have CleanSpark, which is in our diamond tier, which is our small cap, micro cap portfolio, you're earning in Bitcoin, right? And so how do you pay your bills? I mean, they got large bills. I mean, the energy cost of running these rigs is significant and real. Well, I mean, you can either have stored up fiat that you can pay your bills with, or else you have stored up crypto, Bitcoin, maybe Ethereum, maybe some other cryptocurrency you can sell. But one way or the other, you got to pay your bills. No one is going to gift you the money to pay this. And so the nature of their business is this, which is that the rigs are approximately a fixed cost, right? And so once crypto prices, and let's just for simplicity's sake say that they're only mining Bitcoin, right? Most of them mine more than one thing, but just like for simplicity, well, there's a price above which their costs are completely paid for in terms of the price. And now all the money that they're making starts to drop down to the bottom line, pretty much as pure profit. This is the nature of most cyclical businesses, which is that their costs are mostly fixed. They have very few variable costs. And you think about a crypto miner, what is it? I mean, it's a building full of mining rigs. So the cost of energy, pretty fixed. The cost of mining rigs, yeah, it's a fixed cost. They bought them in. And then there's a small amount of personnel that sort of like, maintain all of this. So there's a point at which pretty much, I don't know what it is going to be, but the market will signal that to you, right? Because the Bitcoin miners will start to rocket higher. In other words, money is just pouring in. In other words, at a certain Bitcoin price, all their costs are paid for and they are just minting money. And the stock market investors will come in and want to own the crypto miners and extrapolate that level of profitability into the foreseeable future. But these are cyclical stocks. They run in a cycle relative to Bitcoin. So at after April 19th, which is my estimate, let's say, they're halving. They only start to make, their reward has been halved. So initially, there is a price jump, so they're still making a lot of money. Their fixed costs are more than covered, and the market's still enthusiastic. The quarters are coming in great. People are like, "Oh my God, these things can go to the moon." The thing is, though, once the halving happens, right, and they go from 900 coins a day to 450 a day, well, it's much harder to produce these coins, right? I mean, it's because the computing algorithm jumps in difficulty. And now you need more efficient rigs, you need more powerful rigs, and it costs essentially more energy to produce one Bitcoin. And so, yeah, their fixed cost jumps, but their rewards have been halved. And unless Bitcoin price keeps going up at some point in time, yeah, their fixed costs are no longer being covered. And the market will signal that to you, which is that they'll peak out. But we're not there yet. People are coming up with a lot of analysis that, in my opinion, in my judgment, is not right. The peak for these crypto miners is still ahead, and they can be huge because, I mean, just say I'm right, okay? And I don't know, $1 million or $700,000, $600,000 is the peak. I mean, these crypto miners will be just gushing with cash. It still won't stop it from having to go through the cycle that they need to go through, which then, means that they'll peak out and then you got to wait for the next cycle. So all those folks that, own the crypto miners, and for those of you who never joined ATG Digital, we pretty much sold all of the miners that I consider to be weaker, that had not so much cash on their balance sheet, didn't have a lot of Bitcoin, and we just stuck with what, in our judgment, our opinion, are the strongest. Because post halving, our plan is, I think we'll probably hold on to it. Not 100% sure. We have to see what the upside is, etc. But some of the Bitcoin miners are entering the halving in already weakened state from all the difficulties that they had from the previous cycle. And some of them will definitely go up, but it's a much more complicated analysis. And so we just kind of like sold everything other than Marathon and CleanSpark. So if you're still in some of these others, go and watch and make sure you are tracking what is going on with their quarterly earnings, with their costs, so you are aware of what is going on with all these companies. All right. Okay. So kind of covered a lot of the things that I wanted to cover. We covered Bitcoin and what's going on, covered Ethereum and why I'm bullish on Ethereum and what its role is. And we've got now at ATG Digital, one big difference between Banyan Hill and here is that all of the tiers have both a stock and crypto element to it. So there's no separation. Why? Because truthfully, the upside is extraordinary in crypto, and many people are still skeptical, and that's all fine and fair. But nonetheless, in our judgment, this is going to be, in hindsight, people's like, oh my God, I was crazy. Why didn't I invest in it? It was so obvious. It was so clear. But all the silver tier, the gold tier, the diamond tier, even the platinum trading tier, we've got options and we got crypto, and we got both going on. So that's, I've covered all of that and then covered the miners. And now let's talk about the stock market. So I have taken on this very controversial view that, in my opinion, the big stocks that like dominate the big indices, the S&P 500, the NASDAQ 100, and also, subject to the most media coverage, both in legacy media and also on social media. Yeah, I mean, in my judgment, this is a kind of like a historic top similar to late 1999, 2000. And the primary reason I've said that is really the investor behavior at the very top is similar. There is a extraordinary fear of missing out. There is this almost complete focus on price. There's a almost complete lack of understanding that these are also assets, and they have a historic range in which they have traded, and that there are sophisticated people, whether it be market makers or whether it be insiders, taking the other side of this trade as you pile in and or hold on. And people are focused on like, hey, but my stock is going up. Sure. Yeah, but you have to sell to extract that gain. And every time you buy, there is a seller to you. If the seller has better information than you, yeah, I mean, you're in a game where you better know when you want to get out. Now, I've told the story a few times that, truthfully, in 1999, I got out far too early. I remember Warren Buffett wrote an editorial in the New York Times, I want to say September, October of 1999. And I was working at the time for, I think I worked, I think I worked at, I'm trying to think where I was. I can't remember, but I had access to somebody who had been around for a while. And he was like, yeah, this is madness. And I was like, when's the top? And he said, September. I said, give me a date. And it turns out that, well, that's my fault. It's not his fault. I chose to just choose that date. And I just sold everything. And for the rest of September, October, November, December, January, February, yeah, and maybe even some part of March, as there were rally attempts, I felt like an idiot. I felt like the dumbest person on earth because, man, some of these stocks just ripped higher by several 100%. But, later on in 2001, 2002, and much later after that, yeah, I was pretty happy that I sold what I did. I was out and I stayed out. There were many, many people like, you got to get back in and buy in. So it's a very controversial view. And it always is when, it's just no different than trying to sort of like buy into low prices and bottoms, where people will say, well, Paul, this can go lower. And it's the reverse at tops. Like, what's high can go even higher. And, and that's continued for these, stocks like NVIDIA and others that, many folks in there. But in my judgment, in my opinion, there is a big, large, historic top that is going on. And many people, especially individual retail investors, new investors, think of tops as being the high price. For insiders, for market makers, there are a range of prices that are at the top. They're dealing in hundreds of millions of shares, billions of shares. They're not looking at one price. We are all focused on like, I want to capture the absolute perfect top. They're not doing that. So in the old like books, like these old books, grab one from old Wall Street, they call that distribution. So in other words, distribution happens at high prices from people who own assets, and they're distributing out to you. Yeah, distribution at high prices. And the opposite side is accumulation at low prices. And human psychology is that, I mean, it's like we all want high prices. We all want our account. We want to see our accounts rise. We don't want to let go. And we don't deal with the world in the sense of high prices. We instead feel good. We want gains. Just like, when prices are low, nobody wants to buy. Why? Because, we see our accounts going down. It's like, well, I just want to hold on to what I got. I don't really want to put whatever I have at risk. But obviously, there's a lot of, area between the beginnings of bull markets and the ends. And in between, prices can trade for all kinds of prices. But at the very highs, and you can see this for these big tech stocks, you can see it for safety stocks, you can see it for dividend stocks. Yeah, these prices are historically high. From these prices in history, generally, it's very difficult to make money. It's being proven out by a number of insiders selling, whether it be Jeff Bezos, or whether it be Warren Buffett selling Apple, Mark Zuckerberg is selling, Jamie Dimon of JP Morgan is selling. And you can look at these companies which don't have incredible prospects, trading for 20, 30 times earnings, 15, 20 times sales, all these things. And people say, well, Paul, I mean, growth companies sell for that. Yeah, but they have 15, 20% growth. And you can really reasonably look at these companies and foresee a prospect for, these companies showing this kind of growth. Why? They're newer. They're based on newer technology. We're talking about companies that are 100 years old, 50 years old, that you can go and look. Their growth shows very clearly, like, 3, 4, 5% growth for 30 times earnings. Yeah. I mean, the prospect of making money long-term is very, very difficult, but it's controversial because it's hard to give up a stock that can go up some more. Just like, it's hard to buy a stock that can go down some more. And we're always like, caught in that psychological trap. But hey, I just want to tell you my viewpoint. No one needs to follow anything. And there's, a number of people say, Paul, I sold NVIDIA because you told me to. I'm not telling you to do anything. This live stream is not financial investment advice. Whatever you choose to do is 100% on you. I'm telling you my experience, and everyone can choose to do what you can. And the reason I bring this up is that it's quite interesting. So this morning, the government released CPI data, which is the way it tracks inflation. And inflation, it has been the main thing that the markets have been really, really focused on, right? I mean, the reason for like the transition from like what was like, prices being marked down all the way until October of last year was that the Federal Reserve released its dot plot of how it might lower interest rates if inflation behaved itself, right? And that's what triggered this like enormous rally from like October on, particularly in all those groups that I mentioned. So today, like, it's interesting, right? So like inflation came in at 0.4%, number of categories came in hot, all of these things. And yeah, clearly a number of people are very, very, very wedded to the idea that stocks can only go one way, up. And yeah, after, a small number of amount of selling, like, yeah, I think the dealers are like, hey, people want high prices, give them high prices. Come here, buy at high prices. But remember, folks, you got to get out to be able to cash that in. So if you're staying in, have a strategy, have a viewpoint. Think of it in two terms. One is psychological terms, would make you happy, which is gains. Then think of it from the perspective, do you really, in any other market, would you pile in to buy things at the highest price? I don't think you do that in real estate. I don't think you do that for shirts. You wouldn't do that. So just remember, the financial markets are very tricky psychologically and something to be managed. And so people are reacting to higher inflation by buying even more of stocks. Why? Because mostly, there's no general reasoning for it. We've already seen a huge rise in interest rates. Generally speaking, there's no point in history in which interest rates have gone up by the magnitude that they have, where they have not, affected the price of assets. Why? Well, interest rates are the closest thing to free money. You put your money in the bank, you get whatever, 4.5%. Everything else has risks associated with it. So as interest rates go up, generally money just tends to, gravitate towards it. I have no exact idea why this continues, but that is in the nature of sort of like, financial markets, so that we can get caught up in the moment. We can choose to pay 100 times sales or 55 times earnings. And then 12 months later, 2 years later, the same thing can trade for 3 times sales and, and nothing relative to earnings. So they're all possible within very short time frames. And when we're in one point, it's hard to visualize the other point. When we're at this point, we can visualize that. So it is quite interesting to see that the mentality is still there, which is that, the markets are a one-way ride. In other words, only up, you can't lose. And that is very, very similar to the environment in which tops have been made from my history and my experience. All right, I'm going to now do some questions. If you have questions on anything, please put them into the chat and I will try to answer you. Raul says, following you since Banyan Hill, what do you think about Fannie and Freddie's move? And this indicative of something brewing or just a normal move? I did a YouTube video on Fannie and Freddie where I laid out what I think is happening, which is that the environment in which Fannie and Freddie were taken under government conservatorship was where there was a crisis. And over the next it'll be 16 years come September. There has been no real crisis in real estate, and yet these companies continue to be under conservatorship. There is no basis for them being in conservatorship. They have more than paid out anything that anyone would consider fair. Not that necessarily, their worlds operate on those bases. And I have laid out that, in my opinion, maybe it's just purely out of like, hey, what are we going to do? They can't be under conservatorship forever. It doesn't really do anything. To some extent, it hinders these companies. They can't necessarily attract the talent that they need. If they needed to, they can't lever up their balance sheet anymore. They're not independent companies. So in my opinion, something's going on. What exactly is that? I don't know. I believe that it's related potentially to a change of power associated with the election. If President Biden is not elected, if Trump is elected president, there are multiple scenarios that I would consider. For example, the Democratic Party has generally been for Fannie Mae and Freddie Mac playing like a role in home ownership. And the Republicans, historically anyway, have wanted them out of it. So it's possible that the Democrats say, hey, what if we lose the election? What if we lose the House? And the Republicans come into power, we should set these things free so they keep their mandate for affordable ownership. Maybe that's pushing it. Or alternately, at least on social media, on X, it's like, Trump has said that, if he was elected, he would free these companies. So I don't know exactly, but whatever it is, it does seem like more real than it has been at any point in time since I've been in these. And I started to I bought one of the Fannie Mae preferreds in 2008 for like 30 or 40 cents. So it's been a very long 15 years for me to wait for these to unfold. In the ATG digital portfolios, Fannie Mae and Freddie Mac stock go back to 2018. In 2022, we put preferreds into one of our services, and we still hold all of them at ATG Digital Media. And if they can work out, the upside in the common would be extraordinary, because these companies are not valued like regular companies. They don't trade as a multiple of book. They don't trade as a multiple of earnings or sales. They trade like they trade on the over-the-counter market, like these are like semi-bankrupt stocks. I mean, that's the way they trade. So I don't know. I mean, Bill Ackman is a billionaire and runs a major fund. He owns Fannie Mae and Freddie Mac. And he says this is an option on normalization. Where could it go? I mean, I've theorized that, well, if these companies were valued like regular companies, like, like banks, et cetera, then they might trade for whatever, 0.7 times book, or maybe 1 times book. That would mean 20 or 30 or, dollars or potentially more. The preferreds would go back, to their contractual limit, which would be par. Relative to interest rate. So that's where Fannie and Freddie are. Peter says, for every whale selling, there's 10 whales waiting to buy. It's like the video of two people selling fruits. One person marks down to sell, and the other person buy at that marked down price and sells. Yeah, I mean, that's the nature of markets all the time. And you have to constantly, constantly understand this versus the psychology of cheerleading price, which is what, we all kind of like inadvertently get into, which is what we want them higher. But oftentimes you got to just like take a step back and be like, yeah, someone just paid that, right? Or like, hey, someone, is selling for that. And you got to think through that. MRG said, is everyone is watching the same exact cycle, assuming a massive rally around the halving does not make it way too easy. You always mention the hardest trades being the most fruitful. Yeah, I don't know if everyone is watching the exact same cycle. You already have exposure to me, and you either through me or other people are watching this, but every survey on X or anything else say that, yeah, I think 80%, I think I saw a survey that said that 89% of people are aware that Bitcoin exists. But I would tell you, if you went and did a survey of how many people know that the halving exists, or let alone what it means, or anything that I laid out to you about the crypto miners, I think you're going to get to some very low single-digit numbers. Truthfully, it took a long time for me to understand the halving or to program it. So, I mean, everyone is not watching this. I mean, the vast majority of the world's institutions had no capability of getting into Bitcoin before the ETF. So this idea that everyone is in and everyone knows everything, yeah, this is a falsity in my opinion. That's all questions that we have. Thanks for attending, folks. If you're interested in, if you're new to my channel and never seen me before, don't know what Banyan Hill is, don't know what ATG Digital Media is, yeah, we have this viewpoint on the world. We look at demand and supply. We look at psychology. We are exclusively focused on innovation, growth, crypto, and what I call opportunity, which is like sort of like newer markets, newer companies. And if you're interested in that, well, check out ATG Digital Media and subscribe to the channel. I do a live stream pretty much every Tuesday. Some weeks I do more than one live stream. If there are topics that you're interested in, look me up on X and send me a note, and I will be on it. Until then, I will be back soon, either next Tuesday or earlier. Subscribe. See you soon. Bye, everyone.